So in terms of building wealth or managing market fluctuations, this is probably thoughts and ideas that I've shared with you guys over the years. But when I look at market fluctuations, as long as we have a proper financial plan to begin with, so as long as we have the proper setup from day one, market fluctuations will happen. And rest assured that we usually have gone through the whole financial planning process, and we have different things in place to make sure that you guys are protected. And I'll talk about what those things are. So I always start when we do our financial planning process or when we're doing financial reviews, I always start with what are we trying to achieve? What are some of your financial objectives, whether it's 1 year, 2 years, 20 years from now? And then we're going to talk about what are the products that we need to have in place and what are the different asset classes that we want to make sure that are working in your best interest. So as long as I feel we have the right structure in place, these fluctuations or these adjustments in the market, for whatever reason they happen, rest assured that you have certain things in place to help us weather those adjustments. So when it comes to structuring things, there's really 3 spots that I want to focus on. The first one, when we sit down and we look at structuring your investments or structuring a financial plan for all of you guys, you will hear me start with, okay, do we have a emergency fund in place? And what I mean by that, what are the resources you have if you need to pull out 3 to 6 months of your capital or something happens? So as we went through the pandemic, unfortunately, some of us had to readjust from business perspective. Some of us could have had, lowering hours. So you would have had to pull in other resources to maintain your lifestyle. So that's where an emergency fund comes in place. And if you have all your capital invested and an emergency happens, then you might have to pull out from your investments in the wrong time. So when if you're invested in the equity markets primarily, and the market pulls back by 20%, and that's when you need additional $10,000 to $20,000 from your investments, you're pulling out of the market in the wrong time. So having an emergency fund, what I mean by that is either having 3 months worth of your gross expenses or net expenses in your bank account, maybe partner that with a secured line of credit. So you want to have 6 months worth of your expenses between a bank account and a secured line of credit. That's what I would consider an emergency fund. If you don't like the idea of relying on a line of credit, you want to make sure you have 6 months worth of your expenses in some kind of a bank account or in some kind of an extremely secure investment vehicle, whether it's a high yield bank account, whether it's perhaps even a cashable GIC, something along those lines. If you are already retired, certainly we want to make sure that we almost have 6 months worth of the income that we're pulling out for you in some kind of a very conservative investment. And for those of you who are retired and actively pulling income from your portfolios, we certainly do have that in place. I refer to that as a cash wedge. So pre-retirement, you want to make sure you have your emergency fund in place. Post-retirement, you want to have your emergency fund and then also have that cash wedge. So even when the markets pull back, you have sort of the appropriate allocation of your capital. Second way we want to combat market pullbacks is really asset allocation. So from day one, making sure you have appropriate amount of cash, fixed income or bonds, and stocks in your portfolio. And the combination of that really depends on your age, your risk tolerance, and back to that question of what are we actually trying to achieve, right? So are we trying to save for your retirement 30, 40 years from now, or are we already retired and we want to make sure that we have stability of capital and income? So that is what's going to depend on what your asset allocation looks like. When we sit down in our reviews, that is something that we always review, or I always review before we sit down. Do we have the appropriate asset allocation in place? And then we'll chat about what has changed for you to make sure that if we need to, we can make those adjustments. The last part of that, and that's the asset allocation and product allocation conversation. And some of you kind of, this is how I word it. If you're uncomfortable with some of this fluctuations in the market and you are retired or retiring, we might want to look at products that provide certain level of guarantees. So whether it's annuities or some kind of segregated funds. So that if you are pulling out that $25,000, $30,000 of income from your investments, you at least have a part of it guaranteed through either a segregated fund or some kind of an annuity. So if we have those three things in place to begin with, when we're doing the financial planning process, when we're looking at market pullbacks, we're already kind of bulletproof and ready for anything the market has to offer to us, right? If there is a pullback, it's usually temporary. There is usually a reason, a theme for it. And the one thing that I always want you to keep in mind is underneath the hood, under the title, ABC, private pool or ABC equity, what are the businesses that we have under the hood, and understanding, what are those businesses? What are they going to be around for the next 5, 10, 20 years? And are they going to continue to make us money? Okay. And that's kind of when Dave and his team come and play, because I try to deploy very active managers. So even if you and I are not making any changes per se as the market is pulling back, I'm very conscious of what the managers are doing and how they're tilting your portfolio. So not only to protect you on the downside, but also allow us for a much quicker recovery on the other end. So that's kind of what's happening behind the scenes from a financial planning perspective. And again, happy to review those pieces for all of you guys as we sit down and review things over the next little bit if we haven't done that. But these are all the pieces that we have in place so that I and hopefully you guys can go to bed regardless of what's happening in the market, knowing that we're structured in a way that we can, withstand any market pullbacks. But I think what I really want to leave you with is as follows. Number one, we want to make sure we have a solid game plan behind the scenes in place. So that's my job, and that's our job here. Number two, and my team has heard it as of January the 2nd, when markets do this, we go to work. And we've been working diligently, making sure that we're connecting with you guys, providing you with any information, and really walking you through this uncertainty, this uncomfortableness, so that you feel, okay, at least I understand what's going on. So we want to make sure we're positioned properly. We want to make sure that we're getting educated, understand what are we actually invested in, and then always in the most simplified way, ask yourself, regardless of the current rumbling, the businesses that I own, will they continue making money? So as an example, if I own a Costco or Amazon, will that business continue making money in the longer term, in 12 months, 3 years, 10 years, 20-year period of time, and really tune out this rumbling, the current rumbling. And the last part, and that's what I've been doing personally, and for those of you that's appropriate to do this, we are primarily, and that's kind of the way I've always looked at building wealth, is buying quality businesses that are going to return value to you year over year. So if that's what we're invested in, and if you certainly we can recap and kind of give you another perspective of exactly what it is that you're currently positioned into. Add if you can right now, because the businesses are on sale. And the analogy that I was given, it makes some people laugh and some people cringe, but I have a family, and if toilet paper is on sale, what do? I usually stock up, and I'll show up to my house with a trunk full of toilet paper. So think of quality stocks as that toilet paper that's currently on sale. You're going to need it. Eventually, it's going to make you money. We cannot predict. We don't have the beautiful, globe to see exactly when the market is going to turn. So this is nothing that, I do feel as much as it feels the world is coming to an end, I think this is just another market correction that we just need to walk through and make sure that we have certain things in place. So that's kind of the thoughts that I want to leave you with. Make sure we're positioned properly. We want to review what we have. If it's appropriate, we want to add. And just make sure that we're here. So if you're concerned, if you want us to go over your specific positions or provide you with some, okay, Anna, am I positioned for this? A recap, because a lot of the times we'll meet and then life happens and you might forget sort of what we talked about. So feel free to reach out to either myself or Maria to book a time for us to either do a Zoom or a phone meeting. I do take on in-person meetings now, so I'm back to being able to come out and meet. If you're comfortable, I'll completely leave that up to you. So we're always here for you guys. And I'll kind of leave you with that.